Matt Whitaker, former U.S. Acting Attorney General.
This is such a great conversation about America, our future, what's going to save our republic.
We have a great football player. Matt Whitaker is here. Matt.
They tried to bury me. They didn't realize I was a C.
It's a touchdown, Whitaker.
Former acting U.S. Attorney General.
Under President Trump.
I'm going to be an unwavering supporter of law enforcement.
Welcome to Liberty and Justice with your host, Matt Whitaker.
Welcome to Liberty and Justice. I'm your host, Matt Whitaker. It's an interesting show today. We're going to do a deep dive into central bank digital currencies. And my guest today is Michael Faulkender. He is the Chief Economist at America First Policy Institute, where I am, full disclosure, the co-chair of the Law and Justice group. And he's also the former Assistant Secretary for Treasury in the Trump administration. Michael, welcome.
It's great to be with you, Matt.
Well, before we started recording, we were already talking about all the twists and turns of central bank digital currency, or as some people call them, CBDCs. You can call them either one, but that's going to be the topic today. Why don't you, for the folks that are tuning in, I have some great loyal listeners and viewers for this show, and I'm very grateful for them. They, everywhere I go in this country, they tell me they watch it. So every week we try to put a good show out, and this one's going to be, I think, exceptional because you're our guest. But why don't you tell me tell our listeners and viewers what CBDCs are and why they're quite frankly a threat. Sure.
So let's start with just the basic role of money and paper currency, right? So money does two things for us. It's a store of value and it's a means of exchange. Those are the two essential roles. And the challenge that we have is, as our lives become more digital and more of our activities go online, there's been an argument that paper currency is less meaningful as a means of exchange. And so might we take advantage of the advancements in technology and move to a digital dollar? Right now, to some extent, or to a great extent, the private sector has already done this for us. We transact very little in dollars. Almost none of our transactions we engage in these days are with paper money. And yet at the end of the day, we can always convert the paychecks we get from our employers, the checks we get from the government, money we receive from anything else, into paper currency if we wanted to, but we store it at private banks in bank accounts. And then banks set up payment systems between them to facilitate commerce. And that can be me using a credit card to buy something at my local grocery store. It can also be me ordering something from Amazon and their distribution center being hundreds of miles from my home. I can already use paper currency that then is on deposit with the bank and still engage in digital transactions. So the question becomes, well, why do we need to move to this central bank digital currency? And there are some arguments that perhaps it will increase the speed with which activity takes place. Maybe it will lower costs. And
it's probably, not to interrupt, but it's probably outside the scope of this discussion to talk about the velocity of money and why that's good for economies, and why when the velocity of money slows down, that oftentimes leads to recession. But anyway.
I don't. So there are some reasons why people have thought about central bank digital currencies. There may be some benefits, but what we certainly want to also take into account are the trade-offs, right? None of this is going to come for free. And the issue is that the way that a central bank digital currency would work is that you would largely replace your bank account with a private bank, and you instead would have a bank account directly with the Federal Reserve. Okay, so again, to connect it back to paper money is something issued by the Federal Reserve, but then you've got a bank that acts as an intermediary. Imagine for a moment that you kind of eliminate that intermediary and you just bank directly with the central bank, and they facilitate all payments. And so that generates enormous concerns from a privacy standpoint, from a government power standpoint. And, one of the things that I've learned in my time in Washington is that you've got to think about how people with ill intent can potentially use the authority of the government to do nefarious things, right? And so while there may be some benefits, we have to greatly safeguard our liberties against the potential abuse of having all of this power over our financial lives centralized with the government.
Yeah. Yeah, and I was kind of thinking as you were talking about how we got here, where you know, really, I guess in the mid 1800s, banks would issue their own currencies and back it with their own, gold or silver or whatever they claimed they had in their safe, and then there'd be all these runs on banks, and our history, we had the certain presidents wanted to have a central bank or a government owned bank, and obviously those were hot issues back in the day. And now we have, I think, we all understand a little bit what the Federal Reserve is, and that they're actually notes and not dollars. I mean, I think sometimes people have a hard time wrapping their heads around those types of things, because they hold a dollar and they say, well, this is a dollar. It's actually, no, it's a reserve note.
Right.
Just read what it says on its face. But all that being said, I guess, why don't you dive a little bit more? It's very clear that if the central bank issues the currency, then they're going to be able to control that currency. What are some of the bad outcomes you can see, and what have we? I don't think this is science fiction, because there are moments in time in our recent history where the Treasury and the Department of Justice have tried to use the banking system to punish industries that they don't like.
That's right. So right now, when the Federal Reserve issues those notes, you're largely free to use them as you want. While those notes have serial numbers on it, there is really no tracking of how the money is used. But as you move into, and so right now, if you use a banking system, while your credit card transactions are tracked, your debit card transactions, your checks are tracked, as you well know, Matt, you know this better than I do, the federal government needs a warrant to go find out how you are using your money. Well, but what if it's the federal government itself that is the one doing the intermediation? What are the lines between the government being able to facilitate all of that activity and the federal government knowing how you're using your money without going and getting a warrant from a judge? Where is judicial review in all of this? What kind of abuse can take place there? Second, as we were talking about, we saw during the Obama administration, there was an activity that the Justice Department launched called Operation Choke Point, whereby essentially the Obama administration said there are certain industries that money laundering is more likely to take place in. And so banks, we want you to cut back, if not eliminate, your lending activities to those industries. Now, this was not enacted by Congress. There was no massive study showing this increase in money laundering among these activities. It was more that they just didn't like them. And so they went to banks threatening regulatory action if the lending activities to those industries were not curtailed. Well, again, imagine for a moment if instead of an administration having to go to banks and telling them not to do in lending activity, they were able to just go to the Federal Reserve and say, we don't want you to facilitate any payments to those activities anymore. I mean, it's Operation Choke Point on steroids, that they can just, without apparently acts of Congress, it would just at an administrative whim potentially come in and decide we don't like these industries, therefore we're going to preclude payment on it. I mean, is it all that unreasonable for us to think that they're going to say, we don't want you buying guns, even though they are legal to defend yourself? We don't want you purchasing alcohol on Sundays, or, come up with whatever activity the federal government, the administration at the time doesn't want you engaging in. We don't want you providing materials to pro-life institutions. We have seen the extent to which this administration and the Obama administration weaponized parts of our government. And if what you now do is facilitate the weaponization of the payment system, that's just, it's so central to every other part of our lives. Everything we do, almost everything we do, there's an exchange of payment. And if now the federal government has full knowledge of all of your payments, actually provides all of the architecture facilitating those payments, and on a whim can decide, well, we don't like those activities anymore, we're going to stop them. What are the boundaries there? What does that do to individual liberty?
Now, I know that there are some that are going to listen to this that are going to say, come on, you guys are imagining an army over the hill. This is, there's no movement right now. There's no pending regulations. How, use your crystal ball a little bit and look into the future. Is this something that we should expect regulations, or we should expect the Fed or the Treasury Department to start to make moves into creating a central bank digital currency? And have other countries done this?
So the Biden administration issued an executive order early on in its tenure that did a number of things. Number one, it called upon the Department of Treasury to write a report, and it was actually a decent report looking at some of these issues. And in fact, the Treasury Department's own report came out and raised some of these concerns about privacy. But second, it encouraged the Federal Reserve to continue looking at updates to the payment system. And so the Fed has been launching and creating a real-time payment system. So again, not to get too far into the weeds, but as most of your listeners may know, banks generally have everything clear once a day, right? And so like all the checks that come in, all the deposits that come in, they all kind of post overnight and then it's there. So we have posting that's discrete. It's once a day. So the idea is they want to go to a real-time posting system so that those transactions post immediately instead of just once at the end of the day. That system has the ability potentially to be the foundation of a CBDC. So in creating the FedNow system that is this real-time posting between banks, it has the potential to be modified into a CBDC. And so they continue to create that infrastructure. The third thing is that the executive order called upon the Department of Justice and the Attorney General to render a legal decision as to whether or not additional legislation would be required if the central bank decided to launch a digital currency. And my understanding, you may know this better than I do, but my understanding is that there is a view at both the Department of Justice of this administration and the Federal Reserve that no additional legislation is required, that they could, if they so wanted, launch one. Now, I would anticipate that were they to start mandating that people move to it, that's going to require an act of Congress. But one never knows once this thing is out there, how much they effectively kind of coerce people to move towards it. And the launch of it, it seems to me, the decision to do that belongs with the first branch of government. And that is what I've been saying to people is make sure you let your member of Congress know that anywhere and everywhere there's any kind of must pass legislation, somewhere in there, we need to write into law that any launch of a CBDC by the Federal Reserve must have the affirmative approval of Congress.
Yeah, and remember, this is an administration that lost in the EPA versus West Virginia when they wanted to sort of take authority that they didn't have from Congress and regulate carbon. Obviously, this is the same administration that without authority wanted to forgive student loan debt. So, I mean, they are very much willing to take executive power and exercise it, even if they're not authorized by Congress. And obviously the Supreme Court, through the major issues doctrine, this seems like the type of thing that would fall into that bucket that, no one until recently had ever contemplated a central bank digital currency. And so I can't imagine that, Congress has authorized that. Now, that being said, that's probably a future fight that maybe both of us will be involved in. You never know. But one more question is are any other countries doing CBDCs?
Yes. So other countries are looking at this. So China certainly is more advanced than we are on doing this. And this is where you generate some additional concern, which is in China, a lot of their transactions have moved to online platforms as well. And because there's much more engagement by the government in every part of their economic activity, they actually create things called social scores in China. So an input into your social score is how you spend your money. And so can you imagine if we start having the federal government create an algorithm that says, based upon your spending habits, you're a good person, you're a bad person, and we're going to allow or disallow various activities based upon this score of how you're spending money, and we're going to deem how pro-society or anti-social you are. That's what's at play here, right? And given that this is an administration who came out with their own version of the Ministry of Truth, given that this is an administration who, as you mentioned, Matt, about student loan forgiveness, when the Supreme Court came down and said student loan forgiveness was unconstitutional, did the Biden administration pull back? No, they said the president out there at the end of the day said, it's okay, we're going to find other ways around it.
Exactly. You know, he's and they already have come out with a proposal that appears to again have a very weak toehold into, you know, what the law actually says. But, you know, this administration,
but back to your question, countries that are, you know, countries like China who are a little bit more authoritarian, China is proceeding with the launch of a central bank, or certainly the facilities to engage in this kind of monitoring of transactions.
Now, would these central bank digital currencies be blockchain based, like you know, people would imagine a Bitcoin or an Ethereum type situation?
So whether they're blockchain on multiple ledgers, or it's a single ledger that's, I mean, I believe it's built on blockchain technology, but I don't know that a central bank digital currency necessarily requires that it be redundant ledgers, you know, simultaneously versus a single ledger. I'm not advanced enough technologically to know whether one requires the other. It's just merely that these are direct claims against the Federal Reserve rather than this indirect system that we have right now, that the banking sector lies between the Federal Reserve and the consumer.
But you're so right. Going back to sort of your original proposition, which is, you know, the law recognizes that essentially your transactions are private, and unless and until the government can get a warrant to get your private transactions, whether that's your credit cards or your checks or, you know, your ATM withdrawals, whatever it is, you know, they can't just have that information. And this central bank digital currency would certainly eliminate their need for that, because they would have all of the information to the from, the how much, and even maybe what for. I mean, it's really frightening stuff. And I don't think that we're premature to sort of be waving the flag and suggesting that this is not and should not be the future of the United States of America.
That's right. And when you see the ways in which we've had the unprecedented weaponization of government, I think it's entirely appropriate for people who have these concerns about individual liberty to, in advance, identify areas of concern that have the potential to be weaponized. It's too late if it's already become weaponized. We need to have people identifying these ahead of time, raising the alarm bells, and calling upon Congress to put in place appropriate safeguards so that we're not trying to fix this up after our civil liberties have been violated.
Yeah. Before we move on to one final topic, is there anything else about central bank digital currencies that we should make sure the listeners know?
They're somewhat related to cryptocurrencies, but they're not identical, right? So we are still talking about something that's in dollars as opposed to cryptocurrencies that are other supply and demand. So there's, you know, one should not interpret our discussion today as anything in opposition to Bitcoin or Ethereum, or having anything to do with those
or even Doge.
Right, exactly. So the concern here is, are we now going to place the government at the heart of payments rather than private banks?
Yeah.
And so it's just important that your viewers not think that this is in any way calling upon any kind of legislation in the cryptocurrency space. This is exceptionally specific to the role of the government in providing direct bank accounts to individuals and the power that they would obtain from it.
Well, since I have you, Michael, I can't help but, since I'm kind of a amateur dismal scientist myself, and you're the chief economist at AFPI, I have to ask you your view of the short-term and long-term American economy as we sit here. We're sort of at the second half of July of 2023. What do you see? Is there going to be a recession, or has the Fed landed us softly?
I've been saying for quite a while now that the fact that wages haven't been able to keep up with inflation, the fact that people are working their way through all the stimulus money that they accumulated during the pandemic, and that credit card debt is hitting levels that we have never seen before. At some point, consumers are going to run out of money and they're going to have to pull back on their activity. And particularly not only with credit card debt at its levels, but with rising interest rates, that's going to start to bind even more. And so I've been surprised a little bit about how resilient consumers have been, but we are starting to see signs of it. We had a report come out earlier this week indicating that housing sales are falling off quite a bit, that the rising interest rate environment has finally had an impact on housing that we thought would have already taken place. So in the short run, I anticipate that I don't see the Fed quickly, I don't see the economy getting quickly down to a 2% inflation rate. It's still operating above that. The core inflation has been around 4.5% over the last 12 months. So we're still looking at above normal inflation, and yet we're looking at very little growth. And so it's the standard stagflation. And largely that's a result of administration policies that put priority on regulatory compliance and the government knowing seemingly better on how to run the economy than the private sector. If you look at the jobs report for last month, the 4 sectors that saw job growth were the government itself, social services, healthcare, and construction. And what do those 4 industries all have in common? Most of the money is coming from government. So there's a lot of construction jobs right now that's coming from the infrastructure bill and from the CHIPS Act. So a government-driven economy is generally not known for being, 1, sustainable, or 2, causing much growth. So that's of concern. The long run, the challenge that we have in this country is the same as the rest of the developed world, which is that we have an aging population and we're having fewer children than ever. And so the concern we have is that are we going to have enough workers to actually provide for this? We have a growing population, but the mix of the population is different than what it's ever been. And that's creating some economic challenges to our mandatory spending programs. We have entirely unsustainable fiscal budget situation, and we need to get back to growth. We need to get back to abundance. And we'd hopefully like to get back to a position where young people in this country would actually like to get married, have children, and raise families, and bring those values back to our country.
Yeah. And I keep hearing anecdotally that the lower waged worker, the unemployed worker, is already in a recession. They're already dramatically feeling these higher interest rates. Obviously they, again, it's hard. Macroeconomics is easy because you can paint with such a broad brush. When you talk about individual consumers, everybody's different, but I think there's a fairly significant consumer debt burden, and that maybe, that those people are already
half
struggling.
the population lives paycheck to paycheck. And, that's, so they spend everything that comes in. Well, what that means for that, and that tends to be the lower half, more low income people are going to be living paycheck to paycheck than high income people, right? Some high income people have just very lavish lifestyles and they too live paycheck to paycheck, and that's their choice on how much they do or don't save. But people who live paycheck to paycheck are going to therefore not have buffers when there are inflation shocks. And so if wages are not keeping up with price increases and they're living paycheck to paycheck, they have to cut back. And so inflation is more impactful on people who are living paycheck to paycheck. And the other thing is, if you look at where we've seen a lot of inflation in the last 2.5 years, fuel and food have seen higher inflation than a lot of other consumption items. Food and fuel make up a higher percentage of spending for low-income people than for high-income people. Right. And so low-income people have less savings. Therefore, in effect, they see higher inflation, right? Because the inflation numbers that we post are for an average consumption bundle. But if your consumption bundle is more tilted towards the things that have had inflation, then your personal inflation rate has been higher. And because food and fuel have seen higher inflation rates and they make up a larger portion of the consumption bundle of low-income people, they've had it more rough as a result of wages not keeping up.
Fascinating. Well, thank you for joining me, Michael. This is, maybe I'm the only person that finds this stuff interesting, but I hope that, my listeners and viewers do too. So appreciate you being here.
Absolutely. And if you find out that they found it interesting, I'm always happy to come back.
All right. And where's the best place for people to keep track of what you're doing? And I'll make sure I link it in the show notes.
Yeah, look us up on americafirstpolicy.com. All of our work from our various research centers gets posted there, and we've got a lot of activity on every dimension of what's going on at the federal and state level.
All right. Well, thank you for your service to this great country. You never know, you might be back in some capacity, good Lord willing. But as always, thanks for watching Liberty and Justice. I'm your host, Matt Whitaker. Everything I'm doing, you can find it at whitaker.tv. Till next week, thank you.